What does this Mumbai office district, Colombia's third largest power generation company, 4 Australian container ports, and one of Brazil's most important natural gas pipelines have in common? They're all owned by the Canadian company Brookfield. Brookfield is one of the world's largest investors, with operations in 30 countries and 180,000 operating employees worldwide. If you've ever looked at investing in Brookfield, then, like most of us, you've probably gotten pretty confused by their corporate structure and how they make money. This makes sense since there's numerous publicly traded Brookfield entities that you can invest in. So what is Brookfield, who runs it, and how does it work? Before we get started, I wanted to say welcome to Jonomy, where I try to make investors more knowledgeable through useful and relevant information, and not through noise or get-rich-quick stock tips. I don't own any Brookfield stock currently, and this is not investment advice. I've just been researching the company, and I wanted to share some of that research with you guys. If you're an investor that manages your own portfolio, there's a link to the daily newsletter I send out every morning. I sift through the noise of the financial news and trade journals to find useful and relevant information that makes us more knowledgeable investors so we can make better investment decisions. Now let's go over Brookfield. Brookfield is best described as an alternative asset manager, and it's run by this guy, Bruce Flatt. Bruce has been touted by some as Canada's Warren Buffett for his simple, long-term value investing approach. He likes cash flowing critical assets and doesn't get swayed by all the hype of the market, whether it's up or down. So how does Brookfield's business work? Most of you are probably familiar with traditional asset managers such as Fidelity and Vanguard. These asset managers manage stock, bond, and money market funds such as mutual funds or ETFs. In exchange for this management, they charge a fairly small fee. These fees can vary from manager to manager, but are typically less than 1%. Both of these fund types, mutual funds and ETFs, are liquid, meaning you as an investor can easily sell your position in the fund at almost any time on the open market. On the other side of traditional asset managers, there are alternative asset managers. Alternative just means that these asset managers manage assets that are different from public stocks, bonds, and cash instruments. This describes Brookfield. They are one of the largest alternative asset managers in the world. Some other famous firms are Blackstone, Apollo, Carlyle Group, and KKR. There are numerous types of alternative assets. Brookfield has its hand in several, but not all of the types of alternative assets, so we'll quickly go over which assets they're involved in. The first asset is private equity. Private equity is probably the most well-known type of alternative asset. In private equity, the asset manager acquires a company. If it's not already a private company, they take it private. They improve the business and sell it later to another buyer or take it public through an IPO. The difference between the purchase price and the sale price being the firm's profits. This is obviously an oversimplification, but that's just the basics. Another well-known alternative asset that Brookfield is involved in is real estate, such as the Mumbai office district that I mentioned at the beginning of the video. Brookfield has a massive real estate operation that develops and manages different types of properties in most of the major cities around the globe. Brookfield is a leader in infrastructure as well as renewable alternative assets. These entail operating airports, pipelines, toll roads, dams, and so on. Lastly, Brookfield is also involved in private credit. Private credit is non-bank loans to private businesses. They're often riskier loans than banks would be willing to or could make. After the 2008 financial crisis, banks became more regulated, which enabled non-bank lenders to dramatically increase the size of their lending business. In 2019, Brookfield acquired Oaktree, one of the leaders in private credit investing. There are other types of alternative assets, such as hedge funds and venture capital, but we won't be talking about those in this video since this is about Brookfield, and Brookfield's main business does not involve them. Typically, because alternative investments are illiquid, alternative asset managers usually have to raise capital from investors who have a long-term investment horizon and don't need cash immediately, such as pension funds and sovereign wealth funds. But recently, that has begun to change, and asset managers have formed publicly traded vehicles so that investors can invest in those funds. For instance, Brookfield has 4 publicly traded alternative asset subsidiaries: Brookfield Infrastructure Partners, Brookfield Renewable Partners, Brookfield Reinsurance, and Brookfield Business Partners. Brookfield's real estate firm is massive and used to be publicly traded, but they took it private in 2021. Although you could still buy preferred shares in it. Just a little tangent on preferred shares. Preferred shares provide the investor with a predetermined yield, such as a bond, but it often pays a higher yield than a bond would. The company can suspend the dividend, or they can call back the shares at their discretion as well, depending on which type of preferred share it is. These shares do not appreciate as much as common shares do as well. I'll make a video on preferred shares and breaking them down, but for now, that explanation will have to do. So at this time, I want to give an overview of how Brookfield is structured. I mentioned that there's those 4 publicly traded entities, but there's actually more to it. Brookfield recently spun out its asset management firm as well. So now at the top, there's Brookfield Corporation, which goes by the ticker BN. This is an asset-heavy business that acts as the mothership of Brookfield. Brookfield Asset Management is the new asset-light, so-called pure-play asset manager. and it goes by the ticker BAM. BAM is solely focused on generating its fees from its assets under management. Like most asset-light managers, they distribute most of their revenues as dividend. Brookfield Corporation also invests its capital with BAM. The corporation also has stakes in the infrastructure, renewables, reinsurance, and private equity entities, as well as holding the private real estate business. Brookfield Corporation, like all the investors, collects dividends from its stake in each business. So just a quick summary, BAM makes its money by generating fees off of its assets under management. Those fees can be the typical management fee plus their carried interest or their performance fee, and the other public entities generate money through operating in their respective verticals. Before this video ends, I wanted to touch on Bruce Flatt, CEO of Brookfield. I mentioned at the beginning of the video that he was touted by some as Canada's Warren Buffett due to his long-term value investing approach. He doesn't get as much coverage as other famous investors such as Warren Buffett or Bill Ackman, but he's certainly produced an incredible track record. And the way he talks about investing really resonates with me. He talks about investing in critical assets that deliver long-term returns and stable cash flows, which is one of the reasons why they're so big into infrastructure. He also talks about not getting too emotional when the markets get really high or really low, and I also really like that as well. I just wanted to make sure that I talked a little bit about Bruce and why I like him, because I think it's important to look at the management of the business you're potentially looking at investing in. So there's a general overview of the Brookfield universe. This is by no means complete, and I'll probably do a breakdown on one or more of its individual businesses, such as Brookfield Asset Management, in the coming weeks. Tomorrow, I've got a video coming out on a couple of the dividend kings, which are stocks that have increased their dividend every year for the past 50 years. I wanted to dive into a couple of those businesses, so that's what tomorrow's video is about. Again, if you're an investor who manages your own portfolio, the link to the free newsletter is down below. Thanks for watching, and please subscribe and like, and feel free to comment any suggestions you have for future videos or just what you guys want to see. Thank you.